Bitcoin, you end up with a massive blank page with, at the very top right, this fucking alien risk reward, which is Bitcoin. Crypto is a complete alien in terms of performance and risk reward. This chart includes the drawdown of 2022. So you see,
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. When discussing crypto, Raoul Pal sees the opportunity in Bitcoin. With its extensive price history, Bitcoin is remarkably correlated with global liquidity. In fact, Bitcoin boasts an 87.5% correlation, although not as high as it's interesting to observe how the periods of outperformance in Nasdaq lead to a decrease in correlation. This phenomenon becomes more evident during the cycles of mania, such as the crypto mania, which is driven by the exponential growth of this asset. The adoption of technology also plays a significant role in this regard. Additionally, it's worth noting that liquidity is a major driver of Bitcoin, and lots of things Raoul Pal discusses, so please watch the video to end, and share this video and subscribe our channel Everyday Finance. Thanks.
when we talk about crypto, I use the charts of Bitcoin here because Bitcoin has the longest price history. It too is stunningly correlated with global liquidity. You see, Bitcoin has an 87.5% correlation, not as high as the Nasdaq, because, as you can see, it's the periods of outperformance that lowers that correlation. When we start to get, full kind of mania, crypto mania cycles that you get in this exponential asset, because it is a much more exponential curve, because it's driven by tech adoption. And we'll come on to that in a second as well. But you can see that liquidity is the driver of Bitcoin plus technology. But when I look at Bitcoin versus global liquidity, it's outperforming the debasement by 105% a year. I mean, that's a staggering difference versus global equities, which are not doing anything at all and are probably negative. That's a huge, huge difference in your future purchasing power, which is why this is such an important asset. And again, I'll come on to more of this in a bit. But we've ascertained that technology stocks are in a secular bull market. They're 97.5% correlated, but they've been rising very well over time. However, when you look at Nasdaq versus Bitcoin, this is a crucial chart. So Nasdaq is the best performing equity market in the world, essentially. But when you look at it versus Bitcoin, since this period of debasement, Nasdaq has underperformed by 99.93%. Just wrap your head around that. And it doesn't stop. It's underperforming by 45% a year. And as you can see, we're going to break to new lows, and this chart will just continue as Bitcoin and crypto eat the world. It's something I call the supermassive black hole. I look at Bitcoin charts versus every asset, and they're all the same. They're all down 99.9 something percent. And then I look at relative values between Bitcoin and Ethereum, or Bitcoin and Solana, and that's where you get to choose what you think the fastest horse is. And that's why I chose Solana this cycle. But basically, crypto is the supermassive black hole, the asset that appreciates faster than anything else, and on a risk-adjusted basis too. So what's driving this? Well, what's driving this is obviously the debasement of currency, but why the other 105% excess returns versus that? Well, it's this chart. This is starting the internet at 5 million IP users and crypto at 5 million wallets, active wallets. So yes, I know that neither of them are perfect measures, but I'm not looking for perfection. I'm looking for understanding. And what we saw is the internet, which was the fastest adoption of technology the world had ever seen, it grew at 76% a year and then slowed down after year 8 to 43% a year. Crypto has been growing at 137% a year. It's now at 516 million users versus 187 million of the internet at the same stage. And then what we did is assume that crypto just slows down its growth to the same as the internet. I don't think that's going to happen. I think it'll be faster. But it gets by 2025, the end of 2025, we get to 1.1 billion users. So that'll be double the pace that the internet grew.
Satoshi Nakamoto, the pseudonymous creator of Bitcoin, has chosen to pursue other endeavors. Back in the day, around 13 years ago, there was a significant communication sent to the initial developers of Bitcoin on April 23, 2011. One of the core developers, Mike Karn, recently shared some interesting details from an email conversation with Nakamoto. They discussed the various challenges and technical aspects of incorporating Bitcoin functionalities to combat spam by utilizing BTC as collateral. I hope that the development of Bitcoin continues to progress, providing Java developers with an alternative client to work on. It's always beneficial to have a simpler foundation that can focus on specific tasks without having to handle everything. Satoshi's final message also conveys a feeling of transition. I had a few other matters occupying my thoughts, as per usual. I have shifted my focus to other endeavors, confident that it is being well taken care of. Happy for everyone. The identity of Nakamoto continues to be a perplexing enigma in the tech world. Despite the lack of concrete evidence, the conversations with the initial adopters of Bitcoin offer valuable insights into the early days of this digital currency. Numerous individuals have been subject to speculation as the potential original creator of this cryptocurrency. One of the most debated cases involved Craig Wright, an Australian computer scientist, faced a lawsuit in 2016 from the Crypto Open Patent Alliance in collaboration with the United Kingdom. Judge James Miller's ruling last March stated that he was not the creator of Bitcoin. In October 31, 2008, Satoshi introduced the world to Bitcoin by publishing the Bitcoin White Paper. This white paper was then circulated among a mailing list of cryptographers. The paper described a technique for utilizing a peer-to-peer network to establish a digital transaction system that does not require trust or involvement from third parties. Satoshi diligently worked on Bitcoin software until 2010, when they entrusted control to other developers. Since then, Bitcoin has experienced remarkable growth, becoming a $1.3 trillion asset. Let's back to the Raoul Pal interview.
And because this is a network and the tokens are at your participation in the network, they go up a lot. It's as simple as that. It's Metcalfe's law. So when you've got the biggest technological trend of any asset class in all of history, you're going to make a lot of money if that trend continues. This is why it's the biggest macro trend of all time. But it goes on. If we look out further using the internet adoption growth, and we slow down the trend rate of growth of crypto to the same as the internet going forwards, we get to 4 billion users by 2030. That's half the world's population. Now, will this be perfect? It's been pretty perfect so far. I've been showing this chart for 5 years now, but let's assume not. Either way, these numbers are simply staggering. And that's why you get that log chart of Bitcoin over time, because it's the adoption curve is what you're seeing, which is why the sell-offs, even though they sound terrifying, down 75%, are just blips in the overall trend. And over time, it just keeps compounding growth. You see, to show how starkly this compounds growth, this chart of all of the asset markets since 2011, I think is hilarious. So you've got the usual NASDAQ, blah, blah, blah. So we can look, ignore the top three for a second. NASDAQ, 17%, beating the debasement, that 12% number, and compounded 800% since 2011. That's a fucking good investment. What a great investment the NASDAQ's been. Then we go up. Look at the top, Bitcoin. Bitcoin every 3 years is the worst performing asset. The next 3 years in a row, it's the best performing asset in the world. And even with the drawdowns, those scary drawdowns that everybody hates, it's compounded 20 million% returns. Since we started talking about Bitcoin on Real Vision in 2014, it's up 450,000%. Its annualized return is 139%. That's mind-blowing, right? We've never, ever in history been given an asset like this. But when you go out the risk curve a bit to newer crypto, getting up the risk curve, getting up the adoption curve, well, in 2016, out comes Ethereum. Out of the gate, monster returns, huge drawdowns, compounding returns, 364,000%, annualized at 149%, which is better than Bitcoin. Solana came last cycle, again, came out of the gate, fell 94%. What are the compounded returns? 7,713%, which is 200% a year. Right, so there is no asset class in all of history that's ever performed like this, even with the drawdowns. This is why I keep saying to people, you just want to buy and hold them. And if you can make the right switch amongst the big ones as the next big network gets adoption, you'll make even more compound returns. Right, this is the biggest gift we've ever been given as investors. And it's the biggest macro trade of all time. Let's go back to the risk-reward topic. Here's Jurrien Timmer's chart that I've stolen from him, which is, on the left, is all of the bubbles of risk-rewards of assets and how they look. Pretty typical. And this is how asset allocators think about it. But when you add in Bitcoin, you end up with a massive blank page with, at the very top right, this fucking alien risk-reward, which is Bitcoin. Crypto is a complete alien in terms of performance and risk-reward. This chart includes the drawdown of 2022. So you see, again, I keep saying it's a gift, and people still don't really understand what a gift it is. It's something unlike anything we've ever had in history, and it gives us a hell of a chance to make money. So to sum up what the biggest macro trade of all time is, it's crypto going from 2.7 trillion, where we are today, to, let's say, 12 trillion by the end of this cycle, and on to 100 trillion within 10 years. And you've got to understand, this would be the fastest accumulation of an asset class in all recorded history in the shortest period of time. It'll have driven the highest returns of any asset class in all of recorded history in the shortest period of time. In fact, in any period of time. And it will be the fastest accumulation of wealth the world has ever seen in the shorter period of time. If we go and generate 90 odd trillion in wealth in the next 10 years. To put that number in perspective, because we're all getting bored of such big trillion numbers, that is, the S&P 500 is $50 trillion. That is the accumulated worth of all the companies that have succeeded and failed and grown over time, driven by the US economy.
On April 24th, Bitcoin continued to exert pressure on a crucial resistance level as research revealed that buyers from Wales took advantage of the dip in the BTC price. There was some market movement, with a $67,000 increase following a recent boost. However, the daily close remained within a narrow range. According to recent monitoring data from CoinGlass, there has been a significant increase in buying activity. The bid wall on Binance reached approximately $35 million at the end of the day, with most sellers now asking for prices between $67,000 and $67,500. Looking at the order book over the past month, it is clear that changes in liquidity placement have had a significant impact on price movements. As blocks of Bitcoin ask liquidity decrease and blocks of Bitcoin bid liquidity increase, the trading range tightens to around $62,000 to $68,000. A corresponding chart also demonstrates the active trading that has been taking place. There is a particular class of Bitcoin holders that has caught the attention of analysts. This group, which holds orders worth $110 million, has seen an increase in exposure during April. This discovery contributes to Santament's ongoing research. The latest analysis reveals that wallets with a balance between 1,000 and 10,000 BTC are experiencing FOMO, fear of missing out. $66.7 million. The total value of Bitcoin has reached $667 million. The key whale tier, a group of influential investors, is actively supporting this upward trend by accumulating an additional 266,000 BTC since the start of 2024. According to Santiment, this accumulation represents 1.24% of the entire Bitcoin supply. Additionally, there is a noticeable sense of fear of missing out, FOMO, among the general public. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.